Something extraordinary is unfolding beneath the surface at Ripple, and the entire cryptocurrency universe is watching with bated breath. Over just the past several days, the usual choreography of Ripple's XRP token releases has shifted in unexpected ways. Hundreds of millions of XRP tokens have been unlocked, relocked, and shuffled in a pattern that breaks from tradition, leaving analysts scrambling to interpret the implications. Is this the prelude to a seismic transformation, not only for XRP, but for the future of global payments and digital finance as a whole? To truly grasp the magnitude of what's happening, let's rewind to the origins of Ripple's token management philosophy. When Ripple introduced its now famous Escrow system in the closing month of December 2017, the company was making a promise to the world. Stability and trust would become the defining features of XRP. At the time, Ripple placed a staggering 55 billion XRP, effectively the lion's share of its total supply, into a series of cryptographically secured smart contracts. The rules were simple, yet profound. Only 1 billion XRP would be made available each month. Any tokens not deployed would be relocked, extending their release into the future. This mechanism was designed as an antidote to the fear of sudden market dumps that had plagued earlier cryptocurrencies. Why was this so important? In the often volatile world of digital assets, predictability is a rare commodity. Ripple's business mission was, and remains, ambitious: to revolutionize cross-border payments for banks and multinational corporations, leveraging XRP as a bridge currency to slash costs and settlement times. The escrow system was more than just a technical solution. It was a strategic move to build confidence among institutional partners. As one financial historian observed, Ripple's escrow contracts were a watershed moment in crypto, setting a new standard for how tokens could be responsibly managed to foster institutional trust. For years, this approach worked almost flawlessly. Every month, like clockwork, 1 billion XRP would be unlocked from escrow, with the vast majority, often as much as 800 million tokens, swiftly relocked for future release. Blockchain trackers such as Whale Alert provided a running tally, offering real-time transparency and lending credibility to Ripple's public statements. This discipline became the backbone of XRP's market reputation. As a leading crypto strategist once put it, Ripple's programmatic escrow schedule is the bedrock of XRP's price stability and a magnet for serious investors. However, recent weeks have brought a dramatic departure from this established rhythm. In early July, Ripple made waves by unlocking only 500 million XRP, less than half its previous monthly standard. Of these, 400 million tokens were promptly sent back into escrow, maintaining some semblance of the old routine. Yet, what truly raised eyebrows was Ripple's decision to earmark 300 million XRP for immediate deployment across several high-impact channels: on-demand liquidity corridors, exchange-traded products, and new strategic partnerships. Unlike in the past, these tokens are not being relocked, but are instead positioned for instant use in the evolving digital economy. The intrigue does not stop there. Savvy XRP trackers soon noticed a failed attempt to unlock an additional 300 million tokens, a technical hiccup that only added to the sense of mystery. Meanwhile, rumor mills are spinning with the possibility that another 500 million XRP might be unlocked before the end of the month, which would bring the total close to the expected 1 billion monthly release. As things stand, 700 million XRP are already locked in escrow for July, reflecting a new, more agile approach that Ripple seems poised to carry forward into the year 2025 and beyond. So, what's really going on behind the scenes? Ripple's evolving strategy involves creating new escrows from its existing XRP holdings, rather than strictly adhering to the old, time-locked monthly schedule. This shift toward a more fragmented, adaptable system is a calculated gamble. On the one hand, it offers Ripple the flexibility to respond to shifting market demands and technological opportunities. On the other, it introduces an element of unpredictability that could have profound consequences for XRP's circulating supply and, by extension, its long-term valuation. Industry voices are divided on the implications. Token Post, a respected crypto publication, has cautioned that these changes could inject new volatility into the market, potentially undermining the very stability that Ripple's escrow system was designed to provide. According to a leading market analyst, Ripple's bold new maneuvers show faith in their technology but also carry risks. Investors crave consistency, and any hint of unpredictability can be a double-edged sword. Yet, there are those who argue that this newfound agility is exactly what Ripple needs to thrive in today's fast-evolving crypto landscape. After all, Ripple still maintains a formidable grip on supply. Nearly 36 billion XRP remain locked in automated smart contracts, while an additional 5 billion are held directly for operational and strategic purposes. A financial strategist recently commented, "Ripple's ability to adapt its supply management while retaining programmatic controls demonstrates an impressive balance between innovation and responsibility." This brings us to the heart of the matter. With Ripple now prioritizing real-world liquidity operations, exchange-traded products, and ecosystem investments over rigid supply mechanics, are we witnessing the dawn of a new era for XRP? Or is this the beginning of a more volatile, less predictable chapter for the token, and perhaps for the broader digital asset market as well? The stakes could not be higher. Ripple's next moves have the potential to reshape not only the future of XRP, but the very architecture of digital finance. So, what exactly is on Ripple's strategic roadmap, and who stands to benefit, or lose, as these secretive strategies unfold? Let's take a closer look at the scenarios that lie just over the horizon, and the risks and rewards that Ripple's bold new direction might unlock. On one side of the ledger, this more flexible, targeted release of XRP could supercharge Ripple's ambitions to serve as the backbone of global payments. By allocating hundreds of millions of tokens to on-demand liquidity corridors and exchange-traded products, Ripple is sending an unmistakable signal. It is doubling down on real-world adoption. If these deployments succeed, we could see a surge in transaction volumes, new partnerships with major financial institutions, and perhaps even a reimagining of what digital assets can achieve in the global economy. For example, consider Ripple's ongoing partnerships with banks in Southeast Asia and the Middle East, where cross-border remittance costs have traditionally been sky-high. By injecting XRP directly into liquidity corridors, Ripple is helping banks settle payments in seconds instead of days, with fees that are a fraction of what legacy systems charge. As one industry observer noted, Ripple's ODL corridors are a glimpse into the future of money, instant, borderless, and efficient. Moreover, the rise of exchange-traded products, ETPs, based on XRP could open the floodgates to institutional capital. If ETFs or similar vehicles are approved in major financial centers such as London or New York, the demand for XRP could skyrocket. A financial analyst recently stated, "The introduction of XRP-backed ETPs could be a game-changer, drawing in pension funds, asset managers, and other large-scale investors who have so far sat on the sidelines." However, this newfound dynamism is not without risks. Some analysts warn that the increased fragmentation and unpredictability in token movements could inject fresh volatility into the XRP market. For retail investors, sudden swings in supply can trigger anxiety, while institutions may hesitate to commit capital if they perceive a lack of transparency. "Predictability is the holy grail in crypto," remarked one market strategist. Ripple's challenge is to prove that flexibility does not equate to fragility. Underlying all of this are lingering regulatory uncertainties. The ongoing legal confrontation with the United States Securities and Exchange Commission continues to cast a long shadow. Should Ripple ultimately prevail, the verdict could unleash a wave of institutional adoption, especially if regulators greenlight XRP-based exchange-traded funds. On the flip side, a prolonged battle or tougher global regulations could slow adoption and keep volatility elevated. As one regulatory expert explained, clarity from the courts is essential for unlocking the next phase of crypto's growth. Until then, uncertainty will be the order of the day. But as the digital asset ecosystem matures, the very qualities that made Ripple a pioneer also demand adaptation. The world of finance is in the midst of a profound transformation, with central banks exploring digital currencies, blockchain-based settlement networks, and programmable money. In this context, Ripple's willingness to evolve its token management may be less a sign of uncertainty and more a reflection of the relentless pace of innovation. For those with skin in the game, Ripple's moves offer a practical lesson. Adaptability is crucial, but so is crystal-clear communication. Whether you hold XRP, are considering an investment, or just want to keep a finger on the pulse of the digital revolution, understanding supply mechanics and company intent is key. Don't rely solely on old patterns or historical data. Today's crypto landscape rewards those who can interpret new signals in real time. Here are several actionable insights to help you navigate this new terrain. Second, monitor regulatory developments closely. The outcome of Ripple's legal battle in the United States, as well as evolving regulations in Europe, Asia, and other financial hubs, could have dramatic consequences for XRP's accessibility and adoption. As one compliance expert put it, in crypto, the rulebook is still being written. Staying informed is your best defense. Third, watch for new partnership announcements and technological upgrades. Ripple's investments in scalable blockchain infrastructure, interoperability, and cutting-edge payment solutions could expand XRP's use cases far beyond its current role. For instance, the integration of the XRP ledger with emerging technologies like decentralized finance protocols or central bank digital currencies could open entirely new avenues for growth. Fourth, pay attention to macroeconomic trends. The global move toward digital currencies, the search for alternative payment rails, and the growing appetite for blockchain-based solutions in international trade all bode well for projects with real-world utility. As one economist recently observed, the digital transformation of finance is not a matter of if, but when. Platforms that can adapt quickly will emerge as leaders. Of course, with opportunity comes risk. The history of cryptocurrency is littered with projects that failed because they could not balance innovation with governance. Ripple's challenge is to maintain the trust of its ecosystem while pushing the boundaries of what is possible. The more flexible its supply management becomes, the more it must invest in transparency, investor communication, and robust internal controls. It's worth noting that, despite all the recent commotion around escrow changes, Ripple still manages more than 36 billion XRP through automated smart contracts. This ensures that a significant majority of the token supply remains under strict programmatic control, a crucial factor for maintaining market confidence. Additionally, around 5 billion XRP are held directly by Ripple, earmarked for operational needs, ecosystem investments, and strategic partnerships. This dual approach allows Ripple to be both dynamic and disciplined, a rare combination in the cryptosphere. Looking to the future, several key scenarios could determine XRP's ultimate trajectory. If Ripple's flexible token deployment fuels real-world adoption, and if regulatory clarity emerges, XRP could become a foundational infrastructure for global payments. The approval of XRP-based ETFs in major markets would likely unleash a wave of institutional investment, dramatically increasing demand and potentially driving up prices. On the technological front, ongoing improvements to the XRP ledger's throughput and interoperability could further enhance its appeal. Conversely, if market participants lose faith in the predictability of XRP supply, or if regulatory headwinds intensify, the token could face renewed volatility and skepticism. Competition from emerging blockchain protocols, many of which are now experimenting with their own supply management innovations, could also erode Ripple's market share if it fails to execute its new strategy with precision. What lessons can be drawn from this moment? History is replete with examples of financial innovation that succeeded because they married bold vision with sound governance. From the early days of the eurodollar market to the rise of electronic payment networks in the late 20th century, the winners were always those who could adapt without abandoning their core principles. Ripple's journey may well be the latest chapter in this ongoing story. So, does Ripple's new escrow approach represent a positive evolution, or introduce fresh risks for the XRP ecosystem? The truth, as is often the case in crypto, is nuanced. Ripple's intent appears clear: to strengthen the real-world utility of XRP, support growing institutional demand, and stay one step ahead in the rapidly shifting global payments sector. Yet, with greater flexibility comes a heightened need for trust, transparency, and sound governance. One little-known fact: despite all the speculation about Ripple's recent maneuvers, the company's commitment to programmatic supply controls remains deeply embedded in its architecture. More than 36 billion XRP are still managed in automated, transparent smart contracts, and the bulk of supply remains inaccessible, except through scheduled releases. For now, the backbone of predictability is still intact, even as Ripple experiments with new ways to respond to a changing world. As an engaged observer of the digital economy, you have a front-row seat to one of the most consequential experiments in modern finance. Will Ripple's new strategy set a blueprint for others to follow? Or will it serve as a cautionary tale about the limits of flexibility? Only time will tell. But one thing is certain: the outcomes here will ripple across the entire financial landscape. If you found this in-depth analysis insightful, don't forget to subscribe, hit the like button, and ring the notification bell so you never miss our expert deep dives into global economics and technology. What do you predict Ripple's next big move will be? How do you see the future of XRP unfolding? Share your thoughts, questions, and predictions in the comments below.